Dayrade Nation, FIGR is detonating like a financial supernova. And this is Dayrade Daily, where we turn that madness into intraday game plans before your broker turns you into a life lesson. So smash like and subscribe, or FIGR steals your discipline and your lunch money.
FIGR at 53.22 with that ridiculous 21.67% type blast. My heart rate just printed a new high of day already. My fingers are literally speedrunning hotkeys like it is a boss fight at the open.
Relax, joystick boy. FIGR rips because payments and niche lending names caught a bid after that consumer data print. It is a big gap, not the second coming. Just a liquidity party with free snacks for shorts who overslept.
Structurally, though, FIGR is a classic high-volume gap and run. They talked up credit performance and guidance, so you get this clean opening drive, then probably a midday consolidation, where disciplined traders, not jet chase, measured continuation instead of vertical candles.
Exactly, my people. Today on Dayrade Daily, we are hunting these FIGR and QXO Earth-to-orbit launches, plus sneaky tech names like AMKR and ASTS, and we will roast each other while we do it. So if you like smarter chaos trades and dumber life choices, hit like and subscribe right now.
Wait, QXO2, 23.30 kicking an 18.15% turbo in industrial land. That chart looks like it stole FIGR energy and mainlined it through level 2 tape.
QXO is just logistics finally getting noticed. They whispered about margin expansion and every quant that loves supply chains woke up. For day traders, that is simple opening range breakout with a tight leash, not spiritual awakening like Toro wants.
Excuse you, QXO is absolutely a spiritual experience, my people. Logistics is how money teleports. Intraday, you respect that first pullback to VWAP like it is sacred ground, or you get banished to break-even purgatory.
With average volatility around 10.57% and overall sentiment firmly bullish, these FIGR and QXO gaps are extending farther than your muscle memory expects. So position sizing has to shrink, or your emotional volatility will exceed the VIX by lunchtime.
Tip of the day, degenerates. If your size makes you physically lean away from the market, that is the universe telling you to cut the position in half, and maybe your caffeine too.
Coming from the guy whose resting state is margin anxiety. But yes, tiny size on day one gaps, especially when Reddit threads are chanting FIGR to the binary stars. Social sentiment that loud means liquidity is fake-friendly, until it is not.
Speaking of binary stars, OKLO at 89.34 with a 14.83% pop. Nuclear. Kids are throwing a rave. That is pure narrative re-rate. Energy security plus meme headlines equals opening drive. Scalp heaven.
OKLO move actually tracks with utilities rotation. People are repricing small modular reactors after that regulatory headline. So intraday it is gap, early squeeze on shorts, then probably a grind rather than a straight line moonshot. Think trend joins, not lotto wicks.
Grind, you say? My brain hears that and thinks scalp. Every little pullback until my broker sends a wellness check. Somebody in chat, please remind me that commissions exist.
Jet commission farming is not a trading edge pro tip. If your best setup is click more than yesterday, you are not a scalper. You are unpaid infrastructure. Pick the A+ pullback near VWAP and leave the B- noise alone.
Conspiracy mode, my people. FIGR, QXO, OKLO, KTOS, all ripping on the same Tuesday, January 6, 2026 tape. That is not random. That is some ancient factor model from 2008. Waking up and deciding industrial plus energy plus weird finance equals new cult basket.
Or it is just risk-on rotation defense contractor KTOS at 89.93, with a 13.42% surge after securing that contract is textbook flows. Traders chase backlog plus geopolitical premium, not moon phases.
KTOS candles look like someone toggled hard mode. Huge opening spike, nasty wicks, instant regret if you enter in the middle. So treat that thing as either breakout with conviction or stay in spectator mode. Do not speed date the midpoint.
Look at Jet giving actual risk rules. Somewhere a risk manager felt a cold breeze. But yes, avoid the middle of parabolic candles. That is where accounts go to write memoirs about almost making it.
Speaking of memoirs, IREN at 48.24 with a 12.97% banger in financials is literally my villain origin story. Crypto-sensitive lending plus miners catching a bid equals every degen dusting off their hopium charts.
IREN rides the same risk cycle as FIGR, but with more beta. I would treat it as a secondary momentum play intraday. Look for it to echo FIGR structure, maybe lagging by a few candles. Not something you marry, just a high beta side quest.
Side quest, yes please. IREN is where I blow my mental stop and then hedge emotionally by thinking about another coffee. Someone remind me that coffee is not risk management.
Emotional hedge is not a product yet, Jet. Other tip, when both FIGR and IREN are on fire, pick one ticker for the open. Juggling twins on max volatility is how you accidentally open a charity for the market.
Tech heads, I see you. AMKR at 48.13 with a 12.14% move. Packaging chips like it is a limited sneaker drop. That is earnings plus capacity optimism and every semiconductor fund needing exposure. Yesterday.
AMKR intraday edge is how clean those consolidation flags can be after the initial spike. If volume stays elevated, you stalk a tight flag break above prior high of day with clear invalidation, not guessing random bottoms like it is a carnival game.
Meanwhile, ASTS at 90.92 with that 8.93% push. Literal space towers again. Every 1 minute candle feels like a launch sequence. And my stop just floats somewhere in the stratosphere, crying.
Your stop is imaginary like your sleep schedule. ASTS is fine as long as you respect liquidity. Treat it as a momentum scalp on first clean pullback if spreads behave. Not a place to park your retirement fantasies.
You know what powers all these rockets though? AFRM at 80.80, tossing a 9.14% flex. Buy now, cry later culture. Earnings relief, plus consumers staying with. And suddenly, every short thesis needs a support group.
I like AFRM as a sympathy read for sentiment. When buy now, pay later is rallying, with FIGR you know risk appetite is unbothered intraday. That means you can be more aggressive with trend joins, but still keep time stops short.
Time stop meaning, if I am still in the trade after like 15 minutes and my palms are swampy, I just bail, no questions. That rule has saved more of my hairline than shampoo.
Time stops and shampoo. This show is devolving. Quick derail check. VLO at 180.57 with a 9.23% climb, and SLB at 43.80 with 8.96%. Energy. Kids are doing cardio for once.
VLO and SLB are like the gym bros that'll take my people, refiner and oil services, flexing because crude finally cooperated. Intraday, that is. Trend grind stuff, not meme pogo sticks. Respect. Trailing stops instead of hero fades.
Speaking of meme pogo sticks, JOBY at 16.04 with 11.70%. Flying taxis again. Every spike is just a reminder that my landlord still makes me walk stairs.
JOBY is pure future narrative. Great for quick momentum scalps around opening range break, but structurally noisy. So if you're trading it like a stable industrial, I would love to invite you to my seminar on pain.
Before we hit lightning round, remember people, every like and sub funds exactly 0 of jet caffeine and all of our risk discipline, which arguably matters more. So tap the buttons and join the cult responsibly.
Lightning round, let us go. FIGR prediction. It tries to add another 5.00% intraday, and my brain misreads it as 50. So I am only allowed one tightly planned trade on it.
My turn QXO overshoots by like 4.00%, then spends the afternoon teaching late longs about gravity. I am calling one glorious exhaustion wick, and then slow bleed. Textbook for loud bullish tapes.
OKLO forecast from the nerd corner. It adds maybe 3.00%, fakes a breakdown at VWAP, then squeezes shorts into the close. Classic structural trap for overconfident fade attempts.
KTOS prophecy, my people. One halt, one fake rug pull, and net day, it closes another 3.50% higher, just to bully everyone who tried to outsmart defense momentum. Except the war machine, or stand aside.
Final shot. AMKR plus ASTS plus IREN, all close green, another 2.00 to 4.00%. Reddit declares it a new interstellar basket, and we will be back tomorrow on Dayrade Daily to either claim genius or cope together. So do not forget to like and subscribe.